It's okay. I'm not upset. I'm just disappointed. Hey, what's up you guys? Welcome back. So by now you guys have probably heard of the news that Riocan just recently announced a dividend cut. In particular, they're cutting their dividend by 33% from its monthly dividend now of 12 cents per share per month down to just 8 cents per share per month starting in January of 2021. And news of this dividend cut caused the stock to plummet by 2% today. And this was the day when the stock market as a whole was doing pretty well. And all the other major Canadian REITs also went up. So yeah, because of this dividend cut, Riocan was one of the only ones, as far as I'm aware, that actually trended downwards significantly. So, you know, after this dividend cut, you're looking at about a 96 cent per year dividend annual yield, which at the current share price of $17.65 brings the yield down to just about 5.4% compared to around 8% before the dividend cut. And many of you are probably wondering by now what my opinion of the news is, because if you've been watching this channel for a long time, you know that Riocan is actually one of my biggest holdings across all of my portfolios. So yeah, I hold just about 700 shares of Riocan, and many of you may be wondering if I'm going to sell those shares. And by the way, if you want to help me replace some of the lost income and you're located in Canada, please do check out my affiliate links for Wealthsimple Trade and Wealthsimple Invest down below in the description, where you can get a free $10 if you sign up and invest your first $100 with Wealthsimple Trade, which is Canada's first and only commission-free trading platform. Or if you sign up for Wealthsimple Invest, the sign-up bonus for that is $50 when you deposit and invest your first $500. Anyways, for reals though, what do I think? Am I selling out of Riocan? Well, I bet you can already probably guess the answer to that question. And you know, I'm sorry for sounding like a broken record, and you guys have probably heard of this before, but I'm not selling. So here's why I'm not selling though. So if you look at my actual position in Riocan, I'd say that I'm actually still doing really well on it. So I started buying this stock back in May or June. I can't remember exactly when, but I was able to get it for a lot lower prices than what the stock is trading for right now. So it's actually able to buy these shares for relatively cheap because I started buying before we had all this positive news surrounding the vaccine. In fact, if you look at my cost basis on these shares, my average cost is around $15.12 per share, which makes my yield around 6.3% even after the dividend cut. And not to mention, I'm up almost 17% in terms of capital gains on the shares themselves. And 6.3% is nothing to scoff at, okay? So I would say that this is still higher than most other REITs and most other dividend paying stocks that are out there, even after the cuts. So if you're buying in at today's prices, you're getting the 5.4% instead of 6.3%, which just puts you right on par with other similar REITs like, for example, Choice Properties, or other dividend paying stocks like Bank of Nova Scotia, i.e. Scotiabank, which both Choice Properties and Scotiabank are yielding around 5.4, 5.5% in that range. Around there, right? And yes, I know something like a Riocan is going to be inherently more risky than, say, like a Scotiabank, but don't forget about the potential upside on the stock itself. So don't forget that Riocan was trading of around $26 or $27 per share before the pandemic. So if we were to go back to that, I think there's around another 50% upside on the stock itself if the recovery story is to be believed, right? So if we get back to normal one day and Riocan is going back to where they were before, that's about a 50% upside from where we're at now. Versus if you look at Scotiabank, they're almost back to their pre-pandemic levels already. So if you're looking at the capital gains on, let's say, all the bank stocks, not just Scotiabank, but if you look at TD, RBC, CIBC, all of those, you really got to ask yourself how much upside is there still left? Or how much room does a stock have to run when it comes to Canadian bank stocks, right? So yes, while it sucks to get hit with a dividend cut, you got to think long term, okay? So from a management perspective, there's a reason why commercial real estate is getting hammered right now, right? There's a reason why these stocks are so cheap. This is because the worst case scenario happened, right? So if you think about how much worse a situation can get, it really doesn't get any worse than a pandemic causing the entire global economy to kind of shut down. So, you know, if you're the management of a company, you can only hold on for so long until you have to kind of make the hard decision to cut the dividend for the sake of the company. And I totally understand and I totally get why they did it. And actually this news didn't really surprise me that much. So I invested in Riocan while being fully aware of the possibility that they might cut their dividend. So back in May I was buying in at a yield of over 9.5%, and to be honest I was kind of thinking how it didn't make that much sense that they were yielding 9.5% while everyone else was yielding a lot less, right? Everyone else in the space, including REITs, were yielding like 6% or something like that. So one thing that may come out of this that is actually partly good news is the fact that it was only a 33% cut. So if you owned any dividend stocks or paid attention to dividend stocks anytime in 2020, I bet you can find examples of dividends that were being cut by more than 33%, right? So some dividends were eliminated completely, and we're talking about companies that used to pay out dividend really consistently for the longest time. So as crazy as that sounds, it might actually be good news because it makes the probability of another dividend cut become less likely. Because I feel like if they would have cut it even more, they would have just announced it right away and cut it to that all in one go, right? Because I think that it will look a lot worse if they cut it down to 8 cents per share per month. And then a couple months later, they're like, oh, just kidding. We're actually going to cut it to 5 cents per share per month. So you know what I mean, right? If they wanted to cut it down to 5 cents per share per month, then they would have just done it all in one go and ripped off the band-aid, in my opinion. I could be wrong though, they could cut it more in the future. Don't listen to me, I'm just some guy. But a few of you have asked me, hey, what about smart centers? So roughly they're in the same space as Riocan, you know, commercial real estate, and now they have a much higher yield than Riocan, right? So this is a good point, but I feel like this is one of those situations where I feel like smart centers might cut their dividends soon too. So you ever seen the scared monkey meme? I feel like this picture sums up the situation perfectly. So if you're smart centers and you're looking at one of your biggest competitors in the industry who's doing almost the exact same thing that you're doing, and your biggest competitor is saying, oh boy, we're getting wrecked by this pandemic. We barely have any cash left on the balance sheet and we have to cut our dividend by 33%. And if you're the CEO of smart centers, you're probably calling up your CFO right now and be like, how good does our balance sheet look? Right? So you know what I mean, right? That's just kind of the risk that you have to take with these kind of super high yielding dividend stocks. And I will say though that this news caused the stock to only go down by 2%, which granted is a lot less than I anticipated originally. So I think overall investors still have a lot of confidence in Riocan given that they're still one of the biggest players in the space. They're one of the biggest commercial real estate landlords in Canada, right? So I wouldn't panic if you're still holding this stock personally. Although with that being said, a dividend cut is still overall a bad thing, of course. And from an investor's perspective, this does make the stock a lot less of an attractive buy compared to before. So I'm definitely not rushing out to buy more shares either, although I'm not selling my shares either as mentioned, right? So I'm kind of happy with my position at the moment. So yes, I know this is kind of a boring answer to the original question of what I'm going to do with my position in Riocan. So my answer is I'm going to do absolutely nothing, right? I'm just going to leave it. So I know this is kind of a boring answer, but it is what it is, right? So yeah, just wanted to update you guys with that news. Anyways, I'll leave the video here. Be sure to hit the like button if you enjoyed the video and consider subscribing if you like the series. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye-bye!